This is the Market Comment by Haralabos Pisuros. I'm Christina Marujos, and thank you for joining us here at XM.com. The dollar tumbled across the board yesterday after cooler than expected U.S. inflation data added more credence to investors' belief that the Fed's tightening crusade is over, despite Chair Powell and his colleagues pushing back against such expectations recently. The headline CPI rate dropped to 3.2% year-on-year, while the core rate ticked down to 4% year-on-year, with the forecasts being just a decimal higher. Alongside the dollar, Treasury yields also slipped, with the 10-year rate sliding around 20 basis points, while according to the Fed Fund futures, the probability for another Fed hike has dropped to zero. Meanwhile, investors are now penciling in nearly 100 basis points worth of rate cuts for next year, with an 80% probability for the first one to be delivered in May. Today, focus for dollar traders is likely to turn to the PPI and retail sales figures for October, as well as a speech by Richmond Fed President Thomas Barkin. Higher than expected PPI and retail sales numbers could revive speculation that inflation could prove somewhat stickier in the months to come, and even if investors are not willing to add hike bets back on the table, they may remove some basis points worth of rate reductions for next year. This could help the dollar recover a portion of the heavy losses it posted yesterday. The main gainers were the risk-linked Aussie and Kiwi, as the slowdown in U.S. inflation did not only hurt the dollar, but also bolstered risk appetite. Those currencies are extending their gains today as Chinese industrial production and retail sales fared better than expected in October. The pound secured third place yesterday, with cable emerging above its 200-day moving average, but today it is pulling slightly back as the UK CPI rates also slid by more than expected, prompting investors to allow a less than 10% probability for another quarter-point hike by the Bank of England and fully pricing in a cut of the same size in June. The next test for the British currency may be Friday's UK retail sales data for October. Stock markets soared yesterday after the soft U.S. CPI data validated investors' view that the era of interest rate rises is over, with the tech-heavy Nasdaq gaining more than 2%. The rally may continue today if the PPI and retail sales data corroborate the view of several rate reductions by December 2024. This was today's market comment here at XM.com.